So which stock should you be buying in 2025? This is what you're here to know. Believe me, the next few minutes of your time is going to change the entire way you look at investing. Now, this is a bit of a clickbait video, but before you click away, I am in fact going to tell you where to invest your money without actually telling you which particular stock you should be investing in. Now, it's very easy for me to just look at market trends and current stock prices and the balance sheet and P&L of big companies and tell you that these are the stocks that might do well for the next few years. But the problem with that, and you don't realize that it's really screwing you over, is that stock prices change all the time. By the time you see one of these videos or read about it in the newspaper or watch the news, the stock price has already changed. And even if you do watch it live or on time, it might still be a problem because the person who is advising you to buy that particular stock may be planning to sell it in the near future or even in the far future. But when that time comes, you might not be aware that that person is planning to sell. You might hold and it might screw you. Before we get into what your investment should look like, let me tell you a little bit about the stock market without any fancy, confusing finance terms. The stock market is basically the entire market where you can buy and sell stocks. When we say buying and selling stocks, each stock is an ownership in that particular company to that small percentage that you can afford. If a company is valued at billions and billions of dollars and you're purchasing $1,000 worth of shares, you own that tiny percentage of that massive giant business. So who decides the stock price? Why does it go up and down? The people, the investors are the ones who decide the stock price. Let's say that there are 1,000 stocks in a company. Now, if every single person on earth wants to buy those 1,000 shares in that company, there's going to be what you would consider a bidding war, right? So everyone wants it, there is a high demand, and so the price of the shares go up. Now, the flip side is if there is no demand for that share, nobody wants it, whoever owns those shares are trying to get rid of it, then everyone's undercutting each other and therefore driving the stock prices down. Now, you might understand this concept, but what you might not understand and what most people don't understand is that there is a very, very critical thing that people miss out. And that is that stock prices are massively decided by human emotions. People think that stock prices are determined by the performance of a company, by the balance sheet, by the P&L. But no, while that does play a significant factor in the stock price, there is also this other element of the news and speculation and various other things. Let me give you an example. Let's say that there is a company that has been producing profit every single year for the last 10 years. Not only are they showing significant profits every year, but they've also been increasing their profits by 10%, 20% every single year. Now, you might say that this is a great stock to purchase given the strong financials. But here's the thing. The last 2 years, the company has projected that they would deliver higher profits than they actually delivered. This raises doubts in the investor's mind, and therefore this could in fact drive the share price downwards. Here's another example, and this is completely made up. Let's say a company like Tesla, they have driven all of the other car companies out of business, and they are the only monopoly in the entire automotive industry. Now, this obviously is going to shoot up the price of the shares. But after a few months, let's say a company like Ford comes out with this news that they have a brand new technology that's going to be way more efficient than Tesla's, and they're going to be selling the cars at half price but at double the profit. Some incredible, mind-blowing news. This is not materialized, but it is the expectation. This is for sure definitely going to drop the Tesla share price and boost the Ford share price. That is, of course, until the market adjusts to what the actual results are to those claims. So my point is, all of these people telling you to buy this particular share and you trying to find that video to find that person to tell you which share to buy, they don't know what's going to happen in the next few months, in the next few years, or even the next few days. So why are you looking for that answer? The thing is, when someone tells you to buy a share, you buy it, and in the next few days the share drops 10% for some reason. That's when people panic, people sell their shares even when they are not supposed to sell, or they go ahead and buy more shares because the market is going upwards and you think you're going to miss out. That is when there is a huge chance that you will in fact lose your money. So does this in fact mean you stay out of the stock market? Absolutely not. That's not what I'm saying at all. The important thing is to understand all this, realize the consequences of your actions, and invest wisely. You can do your research and invest in the stocks that you feel will perform. You invest in something like the S&P 500, which, if you don't know, is a collection of the top companies in the US stock market. Even if one company goes down for one particular reason, it might in fact boost their competitors' sales and profit levels, and therefore, on average, as a market, you will be gaining in the long term. You have other investment options like bonds, real estate, fixed deposits, and so on. You can even dabble a little bit in gold if you want. The important thing is to understand where you're investing in and not look for shortcuts. But the most important thing is to diversify your portfolio so that if something does go down, you're not left hanging. And please make sure you take advantage of the power of compounding. But if you are in debt, by the way, check out this video.